No money today. There is no money in the world today. There is nothing that satisfies all three criteria of unit of account, um, unit of exchange, and store value. Gold stores value, but it's not money because I can't go buy groceries with it. And the US dollar is not money because I can buy groceries with it, but it doesn't store its value. So if you hold gold and its value as sort of as rock solid and measure everything in ounces, the world looks wildly different to you.
Yeah. Well, I'll tell you, I can't think of a better way to kick off the new year by one of our absolute massive audience favorites. Doomberg is with us. Such a unique approach to the markets, to explaining what's going on geopolitically for us, looking at all things commodities, but especially looking at the energy sector. Doomberg, thanks so much for finding time. Great stuff.
Mike, Happy New Year. Great to be back on. You know, every time I come on your show, I get this wave of Canadian subscribers telling us that heard you on Mike's show. And so that's great. You have a very loyal audience and looking forward to another fantastic discussion.
Well, I'll get to what's coming. I've got to pat you on the back, though. I mean, besides a lot of, you've, hundreds and hundreds of articles and pro tier and, interviews, et cetera. But it was in early December, first week of December, you wrote an article, and this is before Mark Carney had declared his intention to run for the leadership. It's about a year ago, just over a year ago now. And you said to us, well, careful, Carney's uniquely positioned to push a pipeline because of his background versus his, Pierre Poilievre's, for example. And I've just been fascinated by that. You were the only one talking about it. We still have that conversation about pipelines in Canada. There has been a memorandum of understanding, although he's given the right of refusal to First Nations and to the BC government, other provinces too. So I'm not sure where that stands, but I thought your insight in the Canadian politics was brilliant at that time.
Oh, thank you, Mike. That was a piece we wrote, as you say, in December of 2024, before Carney was even a contract you could bet on Polymarket. And that piece was called Alberta Clipper.
Yes,
and
that's right.
That prediction flowed from a mental model that we had been toying around with, which was that Trump wanted to unstick Alberta's energy. And if the Conservatives had won, there was no chance that was going to happen. And we saw, because we're pretty skilled at reading propaganda from around the world, and Canadian propaganda, which is a derivative of British propaganda, is amongst the easiest to see through. We could see that Carney was being positioned. And so in Alberta Clipper, we predicted that he would replace Trudeau before the election and that he would be a far more formidable candidate than people were giving him credit for because of just the weight of the Canadian media industrial complex getting behind the chosen candidate, as we called him in that piece, a globalist delight.
Yeah.
And the reason why we decided that it had to be Carney, because this is a classic Nixon goes to China moment. Only Nixon could have opened up China, the hardcore anti-communist, and only the most green of green financial bankers, Carney's track record in this regard is as bad as you might expect it to be if you're pro-energy, and it only could have been him to beat back the resistance from the left. And so that's what transpired. We followed it up a few months later with a piece called The Fix Is In, where we predicted a constitutional crisis in Alberta as covering fire for what ended up being this memorandum of understanding. And then lastly, a few months ago, we rewrote a piece about British Columbia, which predicted that the NDP government in BC will not stand in the way of this pipeline and all of that jazz. And then we have a piece that's going to have published by the time this comes out, but hasn't yet published on Saskatchewan, which sort of rounds out our tour of Western Canada for our predominantly American subscribers. And I should say, Canada gets so little attention down here. It's fertile ground for us because nobody in America is reading about this stuff, but it actually affects them. And it's obviously very interesting to our Canadian subscribers as well. So it's a nice little sweet spot we've carved out.
Well, and you do say, of course, not a surprise when you look at the population differentiation between Canada and the U.S. that you've got more subscribers in the U.S., but you have a huge following in Canada too. And it's from, of course, your expertise and your focus of your group on the energy sector, which of course is still the hottest topic in this country. What's going to happen, as you just alluded to, and interesting. So I'm just letting people know, Canadians are flocking to this, but I'm looking forward to that. You're talking Saskatchewan. You'll be the only one doing that.
It's funny. We like to find off the beaten path stories that when they become part of the media glare that our subscribers say, "Oh, I read that at Doomberg first," right?
Yes.
And not all of them
Well,
pan out, but they're interesting enough and they teach people. So the thrust of this piece is that for all the talk of Alberta and Venezuela and Greenland, for Trump's ferocious appetite for raw power expression in the new emerging chaotic multipolar world, the sort of social preview for this piece is "Don't sleep on Saskatchewan." And to our Canadian friends and to your audience, I'm sure this is not going to be a big surprise, but for a territory the size of Texas and a population of barely over 1 million people, Saskatchewan is one of the most resource-rich, sparsely populated places on Earth. And we opened the piece with the sort of geological history of how potash became so prevalent in Saskatchewan, and our American readers will have no idea that 85% of U.S. potash imports come from Canada, and the breadbasket of the U.S., the corn belt of the U.S., would be in a world of hurt were it not for what is mined and refined and shipped down to the south from Saskatchewan, but also, as you well know, uranium, probably the best uranium deposits in the world by far. Oil and gas, emerging, especially oil and light crude, and NGLs will be on their way, I'm sure. And great agricultural products, wheat, and oils, and all of that stuff, and really great contract law, logistics, railways out of there, and so when Trump's looking around, and I must say this national defense, strategy document, which splashed the headlines here a couple of weeks ago, is truly an amazing document to read. Raw power politics laid bare. We won't be surprised if Saskatchewan isn't roped in with Alberta when the U.S. turns its attention away from Venezuela and turns north. And I know it's controversial for Canadians to hear such things, but that's just reality. That's how Trump will be thinking about it. And in the piece, we say you have to be agnostic in your analysis, whether or not this is right or doable.
Yes.
The physics of it are aligned, and it's the same sort of thinking that got us down the Carney track more than a year ago now. And so we like to put those things out there. They're kind of fun. And the numbers are pretty amazing. And so we just quantify everything for our subscribers.
Well, it is interesting, though, because, those are, you've just mentioned with the potash, for example, with uranium, others, somewhat critical minerals, although we've oversold that in Canada. We don't have the production here at that point. But those other two, uranium is well underway, and canola would be another example. I'm just wondering, is that going to be the leverage to get a trade deal? Because, that scenario, that narrative around a trade deal has had many forms. It's been a chameleon, and I'm not, to where we're at now, I'm not sure.
So, first of all, you might not have as many rare earths as, is being sort of bandied about, but there is an investment in the most important step, which is the processing of those rare earths to pure metal and ultimately downstream to magnets. And, the Saskatchewan Resource Council all but waved a red flag in front of the bull that is Donald Trump in that regard a few months ago, as you know.
Yeah.
And so we're actually not thinking that Trump is all that interested in a trade deal. So Trump is an interesting character, and in many ways he's like nectar from the gods for a content creator, because there's just no shortage of things to write about. But at the same time, he's a complex guy and an extraordinarily polarizing guy. And we like to say that Donald Trump is everything his critics and his supporters say he is. He is the guy who hires Chris Wright as Secretary of Energy and believes in a nuclear renaissance and oil and gas production and energy dominance. And he's the guy who launches Trump coin 3 days before his inauguration.
Yeah.
And we lampoon this stupid fusion merger with Truth Social, with the Trump media, which is a ridiculous merger. And that annoys all of his supporters that happen to be our subscribers. And the people that hate him, and there's plenty of people that hate him, think we're not mean enough to him when we do take Trump to task. And so there's no threading of that needle. It's like writing about Israel. You're just going to get like terrible comments either way. And so our view is that Trump genuinely wants to expand the borders of the United States. He genuinely believes that he will, quote, take Greenland, and genuinely believes that Venezuela's oil belongs to Chevron, and wouldn't surprise us one bit if he turns his eyes to Alberta and Saskatchewan and says, let's carve this out of Canada. I mean, I don't think it'll happen, but I wouldn't underestimate his desire to see it happen. And so we're just putting it on the radar because there's just so much going on in Saskatchewan. And by the way, if nothing else, our piece does close with a highlight of how little of this wealth is actually trickling down to the population of Saskatchewan. It's criminal, really. 1.25 million people with that much resource wealth, that ought to be like Saudi Arabia, where the sidewalks are paved in gold.
Yeah.
I mean, sure, like the average family annual pay is in the sort of top quartile of Canada, but it's also tied for the greatest number of poor people proportionally with Nova Scotia. How is that? Like, if I lived in Saskatchewan, I'd be pretty annoyed at that. Like, why doesn't Saskatchewan have, the level of wealth that Alberta even has, or Ontario? And so, these frictions are, there across Canada, of course, but Saskatchewan in particular, we think. And there is a separatist movement on par with what's going on in Alberta that's developing in Saskatchewan, as I'm sure you know.
Yeah.
And as we say in the piece, look, there's a wide chasm between independence and joining the U.S. But on the path from today's state to joining the U.S., independence is a lot closer. So, we shall see. And by the way, there's a world where people of Saskatchewan could become extraordinarily wealthy if they cut a deal with the U.S. Canada's borders are in flux. Its constitution is weak. Its national unity is unclear. And the Eastern elite have treated the people of the West terribly for way too long. And so, if nothing else, provocative pieces like ours and the discussion around separatism might provoke a rebalancing of wealth distribution and a fairer deal for the good people of Western Canada.
I haven't done this before. I want to just interrupt for a second and say, tell us where to subscribe on Substack. I mean, that's where you can publish and people. No, but yeah. My point is that, and you've done this in many subjects, and that's why I've enjoyed. I'm a paid subscriber. That you have a unique take, a unique approach, the lateral thinking approach to a variety of subjects. But this is a great example. I would doubt many people listening to this have thought about Saskatchewan in the way you've just described. Both everything you're saying, whether it's the wealth, we know about potash, we know about uranium, but again, the redistribution down into the public, with a small population. Two, it's very interesting to throw that up there. Obviously provocative, but Donald Trump may have a picture of Saskatchewan or Saskatchewan circled on his map of Canada too. That's why it's fine reading. So sorry, I'm going to get back to my questions, but just tell me where we subscribe.
Sure.
And I'll do it again in this. Yeah.
Sure. Doomberg.com. You can find everything, including our sister publication, Classics Read Aloud, which is a fun little project that we kicked off in September. But we are aware of several members of the Trump administration who do read us. So maybe we'll put it on the map for them, and then it'll be a self-fulfilling prophecy.
Yes. But okay, so let's move on. I mean, your expertise in energy is what I think grabbed people's notice first. I mean, coming from the industry, an industry background, analytical background, where are we at right now? When you look at, I mean, I know that's a broad question, so I'd ask you to refine it. But I'm looking at the oil markets. One of the things that you said, if you measure oil in gold, you're going to get to all-time lows. That was correct, obviously correct now. I mean, at the time, it may have been difficult for people to understand that because they see increased demand. But when you measure it in real currency, gold, or using gold as a proxy for that, you were absolutely correct. I mean, you look at the massive rise in gold vis-a-vis, still got oil, WTI, struggling under 60 many days.
Yeah, we just put out a piece, as we're recording this morning, called Crude Analysis, where we go over the 4 major mistakes that modern energy analysts are making as it pertains to the quote-unquote oil markets. And The first of those is not recognizing that the very definition of oil is undergoing a semantic shift at the molecular level. So here's the biggest mistake that we see people making. They conflate oil with crude oil. And oil is more than crude oil. Crude oil is oil, but oil itself is way more than crude oil. And in fact, our broad definition of oil is any hydrocarbon that finds its way to a refinery. And why is that? We are swimming in hydrocarbons today. And crude oil happens to be the most expensive of them, tied with landed LNG in Europe for reasons we can get into. But once you recognize that all hydrocarbons are oil, and then you look across the hydrocarbon complex, what is natural gas trading for in Alberta? What is natural gas trading for in Texas? What are NGLs trading for? Natural gas liquids. We opened this piece, Crude Analysis, by telling the story of Mont Belvieu, which is the NGL capital of the world. And nobody listening to this outside of a few industry experts is ever going to have heard of Mont Belvieu. It's 30 miles east of Houston, and it can store 250 million barrels of NGLs. Just to context that, Cushing, which everyone looks at the inventory numbers every week and CNBC reports them breathlessly, can only store 90 million barrels of crude. So you've had this thing grow up in 15 years, Mont Belvieu. And it's not just a NGL storage facility. It has fractionation capacity to handle 4.5 million barrels a day from nothing. This happened overnight. And people don't even know that NGLs impact the oil market. So like the US today produces 14 million barrels a day of crude and 8 million barrels a day of NGL. So it actually produces 22 million barrels of, quote, oil. And if you just look at crude oil, you're missing the whole market. Why is that the case? Because there's engine switching, molecular substitution, and chemical transformation. NGLs are way cheaper than crude on an energy content basis, and natural gas is even cheaper still. And so when you have, half of the hydrocarbons on the board trading at a deep discount to crude, why is crude going to go up? It's not. It's going to come down. Arbitrages close in both directions. So we were on your show a while ago, and I believe we talked about our equilibrium price for oil being $55 a barrel.
Yeah.
And where are we? We're right on the number. Why is our equilibrium price of oil $55 a barrel? Well, landed LNG in Europe, our view is that the break-even price for all the people in that supply chain to earn their cost of capital is $10 per million BTU. And there's 5.6 to 5.8 million BTUs in a barrel of oil. So you multiply 10 by 5.6, 5.8, you end up in the mid-50s. So we rounded down, and we said our equilibrium price for oil is $55 a barrel. And by the way, if you plot 5.8 times Dutch TTF against Brent crude, European grades, they trade in tandem with each other. Lockstep. Why? This will surprise people. 4 million barrels a day of oil is still burned around the world to produce electricity. Half of that's in the Middle East.
Yes.
You can switch between gas and oil to make electricity. So they're substitutable. And landed LNG includes all the costs of the driller, the midstreamer, the LNG export facility, the cargo ship, the LNG regasification facility, and the midstreamers on the other side to get to the power plant. So at the power plant, natural gas and oil are functionally equivalent. They're both burned to create heat, which is used to, spin a turbine by, going through the steam cycle and all that stuff. And so they're the same thing. Heat is heat. And so they trade in lockstep with each other. And so at $10 per million BTU LNG, everyone in the gas world is happy. Appalachia, the break-even cost is $2.25. Maybe the midstreamers take a couple bucks. Maybe the chillers at the Gulf Coast take a couple bucks, and the cargo ship takes a couple bucks, and then it lands, and a couple more bucks, and there you are. And so if everybody can earn their cost of capital at that price, that's where the price is probably going to go. And so when oil was 70, and we were calling this, and we were debating people who were talking about peak cheap oil, which is total canard, nonsense, really. And here we are, $55. Like, where's the apology? Some people were pretty mean to us when we were saying that peak cheap oil is a myth. One poor fella had a whole webpage put up calling us frauds.
Wow.
He has since, of course, completely flipped and agreed that we were correct. But last I checked, that old website is still up. Anyway, I digress. I don't need acclamation from people who are just wrong about stuff. But
yeah.
And so that's you, not me, just for the record. And so again, back to the U.S. Then, if oil is 55 or 58 or wherever we are today, I mean, natural gas is $4 a million BTU. That's the equivalent of $22 a barrel of oil. NGLs are probably in between, let's say 40. So if you could take an NGL and do the same thing you're taking a refined product to do, why wouldn't you? This is why we're seeing, by the way, a wave of closures of naphtha crackers in Europe, which is an oil product, and a wave of new construction of ethane-only crackers in the US, which is an NGL product. NGL is directly displacing oil. You're seeing LNG-powered trucks in China displacing diesel. You're seeing CNG trucks and CNG tractors and CNG dump trucks out in the field where gas is cheap. Look, I mean, natural gas in Alberta is free.
Yeah.
And it's the cleanest burning hydrocarbon on the board. There's so much in the way of cheap energy floating around. So you ask me, what's the state of the energy markets? They're physically in very good supply. Prices are incredibly cheap. An ounce of silver buys you a barrel of oil today. Right? I mean, and we like to say, we don't count gold and, to a lesser extent, silver as commodities, just for the record. They're monetary metals.
Right.
But for every other commodity, here's like, if you only take one thing from this conversation, the long-term real price of all commodities is lower. Why? There's an infinite supply underground. Yes, I know the Earth is a closed system, and there isn't really an infinite supply. But as a lateral thinker, we spend a lot of time thinking about zero and infinity because they're exceptions that tend to prove rules. If you assume there's an infinite supply of commodities, because there really is, all that matters is price, then the next thing you have to understand is that the energy and commodity companies are technological superpowers. They're deflationary machines. They're price takers who are constantly grinding away and getting better and better at extracting more and more for cheaper and cheaper. And because they're price takers, they have to submit to the market. And so if you plot, as we've been saying for years, again, like if you just plot corn in ounces of gold, then forget about gold. Okay, it's fine, because you say, oh, gold's on a run, blah, 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 blah. We like to think that the dollar's on an inverse run, but nonetheless, just take the Bloomberg inflation-adjusted index. I'll pull it up right now for oil on my trusty Bloomberg machine while we're talking. Why pay for it if you can't use it? And it's not cheap, as you probably know.
Yes.
So the Bloomberg uses like $1983, I think. And there's a ticker, WTI inflation-adjusted crude. The current price of crude in $1983 is $17.92 a barrel. Basically cheaper than it was in the 1980s, right? And that's because drilling gets better. You know, in this piece, crude analysis, we talked about not only the semantic shift, but all backward-looking metrics for the oil industry fail to account for technology. What does rig count even mean anymore? Rigs have gotten so much more sophisticated than they were 2 years ago, 5 years ago, 10 years ago. Inventory numbers don't matter anymore because you can flip a switch and you have oil in weeks, whereas it used to take you a year, 18 months before. So the supply response is almost instantaneous to any shortages. You have substitution. And so, when you get into that context, and then, oh, by the way, all these things are co-produced with each other at the same wellhead now, predominantly at the margins in the big shale patches in the US in particular, Permian. When you drill, you get oil, NGLs, and gas. And so the last thing we talk about in this piece is, if you ask me the question, what is the break-even price of crude oil in the Permian? You're confessing that you don't know how the oil markets work, because there isn't a break-even price of crude in the Permian. There's a break-even price of the combination of crude, NGLs, and gas at that particular well in the proportions that they come up to the surface. And you have to consider all three. So here's like an extreme example as a lateral thinker. Imagine a world where AI demand materializes and natural gas is the fuel of choice. And natural gas in the Permian goes from negative spot prices to $5, $6, $7 a million BTU. Not outrageous prices. Crude oil could go negative. Like they'll give away the crude because they'll make all their money on gas. Right now, the reason why gas is negative is because OPEC has kept oil prices artificially high than they would otherwise be. And so people are drilling for the oil and giving away the gas. If Microsoft and Google and OpenAI and Oracle all show up in West Texas and they're going, suddenly gas, the cleanest burning hydrocarbon on the board, is valuable again. They'll just ditch the crude. Here, you have it. Give it away. And so those are the types of, having been in industry, I've competed against co-producers. It sucks, right? If you make molecule A pure and separately you make molecule B pure and somebody co-produces A and B together, that's a bad day for you. Because if B starts to make a lot of money, they're going to overproduce and dump A and vice versa. And you're not going to make any money as a pure play on either side. So for example, in the US natural gas world today, Appalachia is largely a pure play in gas. Well, if crude oil goes up, that's bad for Appalachia because they're going to be drilling for both and they'll dump the gas and it crushes the gas price. So when gas got super cheap 18 months ago, the curtailments you saw were in the pure plays, right, in Appalachia, because they're not getting the crude. And so they just stop drilling because their main product isn't capturing the value. And so co-production economics, which is one of the major things that shale has brought, totally changed the game. Crude oil used to be able to be analyzed in isolation, no more. And you have to analyze everything. And so like the inventory of NGLs in Mont Belvieu is just as important as what's going on at Cushing, if not more so. But you never hear CNBC mention Mont Belvieu, which is why we opened the piece with it.
And, it seems to me, you alluded to this, I don't want to put words in your mouth, but analytically, broadly speaking, that's not getting taken into account. Doomberg's the only people I know who have been talking about that whole, the co-production, yes, but just the impact on different prices. As I say, in Canada, we talk a lot about natural gas, obviously talk about WTI, but it's that interrelationship that really changed as investors. I mean, that plays just a monster part, especially going forward.
100%. That you care about, Western Canadian Select, and now that you have this extra pipeline, maybe things are arbitraging and closing, which is good for Canada, which is the reason to do the pipeline in the first place. But it'd be a bad day for Canada if Venezuela comes into the U.S. fold, because the refineries in the U.S. were built to refine Venezuelan crude, heavy crude, similar but different to Canadian, but similar enough. And so if all of a sudden Chevron, Venezuela used to produce 4 million barrels a day of oil. It's down to 1. Yeah. It's not because of geology. It's because of politics. Venezuela ought to be Canada, 5+ million barrels a day. The U.S. has got this armada down there in the Caribbean. That's a whole other mystery that we've written about, kind of a weird development. But, to put it to an analogy that Canadians will understand, that we try to skate where the puck is going, as Gretzky would say. And the nice thing about the energy markets, and the reason why I think we've been successful, is physics makes for a great edge. Physics it tells you what should happen. It doesn't tell you when or the friction of that transition, but directionally, I know. I'll give you an example. So we watch that pair trade, 5.8 times LNG against Brent. It almost always trades in lockstep. If suddenly it didn't, and it deviated wildly, that's an indicator of crisis somewhere, and we'll be early to that detection, right? So when the whole 12-day war with Iran and Israel broke out, we were watching that pair trade, because if that strait were to be closed, then what might have happened is LNG prices might explode higher because Qatar is on the wrong side of that strait. And they didn't. There was no indication in that pair trade that anything was amiss. So that was an input into our geopolitical analysis, which is, look, the markets don't see this coming. And by the way, those markets are very sophisticated. They have satellites tracking all those tankers and those LNG cargo ships. The other pair trade we were looking at was Brent versus WTI, West Texas Intermediate. So if you think of Brent as European oil and WTI as American oil, if that strait were truly to be closed, or if Israel were to attack the oil exporting facility of Iran and blow it up, you would quickly see, in our view, Trump would impose export controls on crude, WTI would crash, and Brent would explode higher. They trade in lockstep with each other today. That's because the market is normal. So we watch those spreads as like a doctor would watch your heartbeat or your blood pressure or whatever, because they're fundamental diagnostic indicators of tranquility or crisis in the market. And the markets aren't always right, but they're a lot better than most. And so pretty good indicators. So that's why physics is just a great edge. And if you could really spend the time to develop an expertise in the markets. And last thing I'll say is, having done this for 5 years with 325,000 subscribers now, we get huge amount of inbound ideas, expertise, outbound sanity checks on pieces we're writing. We really reach this network effect where we can leverage the expertise of our subscribers, and they learn from us and we learn from them. And so as we write, every one of these we write, we get better at it.
I'm going to just jump around a little bit because time's going to run out, and you do a huge cross variety of things. But just as Ala, what you've been saying, what the market's telling you and the indicators for you, I'm making smiling at myself, because this is going back a couple of years, or maybe not even that long. And you and I were chatting on air, and it's where I got the expression, which my audience has heard many times, I was the biggest copper bull who didn't own any. That came from that. As you warned me at that time, he says that scenario of the renewables and all of that sort of the new energy transition, it's not getting reflected in the copper price. And you said, so be careful. And I took that advice. But exactly as you're saying, you're looking for indicators. So let me come to copper now and say, we have seen some movement in copper finally. Does that get your attention?
I would say that, again, it doesn't challenge our fundamental assumption that the green energy transition is just not going to happen. Trump has kneecapped it. China might still do a bit more. We could talk about China and the limitations of what they're going to be doing here soon. If you plot the price of copper in ounces of gold, it's not all that exciting. So
yes,
if in our universe, we did a pro tier talk called Goldie Leo, the yellow rock at the center of our financial universe. If you view gold as stationary, because it has great stock to flow, it's nobody's credit. It's not money, by the way. There's no money today. There is no money in the world today. There is nothing that satisfies all three criteria of unit of account, unit of exchange, and store value. Gold stores value, but it's not money because I can't go buy groceries with it. And the US dollar is not money because I can buy groceries with it, but it doesn't store its value. So if you hold gold in its value as sort of as rock solid and measure everything in ounces, the world looks wildly different to you.
Yeah.
So you can see that technology in the oil and gas sector is way more than compensating for debasement in geology, just by plotting oil in ounces of gold on a 50-year chart. It's making new lows. If you ignore COVID, which was, it's making new lows, grinding new lows. And so when you say copper's going higher, I hear the US dollar is getting weaker.
Yes. Yeah.
And the reason I hear that is because in other markets where if the US dollar is getting weaker, and by the way, don't fall for this nonsense that DXY is how you measure the strength of the dollar. For those that don't know, this is the dollar index. The dollar's going up, the dollar's going down, as measured against the euro, the yen, the pound. These are all fiat currencies sinking on the same ship, the USS Donald Trump. And so they're going to let it burn hot, and that means that currencies are going to go down. And this is the reason why we're seeing gold appreciate is because of the fiscal situation in the U.S., but also the politicization of U.S. debt, which is no longer a neutral reserve asset after Russia. And gold is a neutral reserve asset, and we're seeing its reemergence as a neutral reserve asset for the settlement of imbalances in trade. Well, the U.S. dollar weakening is going to reflect in things like copper and food and so on, unless, of course, the producers of those things are developing technology at a pace that is more than compensating for debasement. Geology. Copper is not one of those markets. So copper mines take a long time. The grade of copper, as you know, is getting lower and lower at these mines. The current growth opportunities are in regions with political uncertainty, although we did note with some interest, and we did kind of indirectly call this, that the Donald Trump of Chile won the election, and Chile, of course, is a significant player in the copper world. And I think Trump's, the Trump corollary to the Monroe Doctrine isn't just oil and gas. It includes rare earths and copper and lithium and all the other things that the U.S. needs. We're seeing huge attention being paid to Latin and South America. And so, but broadly speaking, the pace of technological development in the identification and extraction and purification of copper is not at the same level as oil and gas, which is why you're seeing the US dollar price of copper going higher.
Mm-hmm. I love that you're measuring, which I think is so key for people to understand, is, the movement in terms of the debasement of the currency. I mean, I'm just drilling it right down to an individual. That's what they have to protect themselves for. They think they made the same amount of money or maybe had a 5% raise, but it can't buy as much. And I think that's, the number one challenge for most people. And so I love the way you're describing this because I think it's the key.
Our philosophy is as follows. We earn in fiat. Right, so we charge fiat for our subscriptions. We try to grow Doomberg greater than the rate of inflation. Knock on wood. So far, so good. Because Doomberg is the primary income generator for the families that founded it, and we save by buying real assets, gold, land, collectibles, and then we invest privately where we can impact the outcome. And those three pillars of our own financial management have served us quite well. But we don't hold more fiat than we need to. Land and collectibles and gold are interesting savings vehicles in their own way. Gold is the most liquid of those. Land is the least liquid. Collectibles are somewhere in between. So we like to have a good mix of those three. But I could take my gold down to the pawn shop, or I could sell my fizz anytime I want. The Sprott ETF is how I prefer to express my gold holdings in paper form. And every month I go buy an American Gold Eagle and stick it in a safe somewhere.
Yeah.
And by the time I die, hopefully a long time from now, my kids will inherit the purchasing power of gold today. And so we like to say that 20 Gold Eagles will buy you a really nicely appointed mid-size SUV. It would have 5 years ago, and it will 20 years from now. And that's how we like to think about it.
Well, it's absolute music to my ears because I think the public isn't aware of that. And as I say, I think that is the biggest threat to their standard of living. I mean, I'm thinking about the people who have experienced a sort of debasement run recently, but they don't own assets, lower income people. But that lower income now goes to about half the population or more. And I worry about them. I mean,
sure.
If I was lucky enough to have real estate, I love your description there, collectibles, gold, real estate. That's what you did it for protection against that debasement. But my biggest worry is the people who do not have that protection. They cannot afford it. And I think that creates a huge social problem coming our way.
100%. And that's why we sort of pointed that out in Saskatchewan, but it's even more true in the US. I mean, the income disparity down here is incredible. And we're worried about it. There's only, the game of Jenga, right?
Yes.
There's only so many bricks from the bottom you can put on top before the whole edifice collapses. And, we have these tech centibillionaires now. The only big winners, of the AI boom. And not so much in the U.S. yet, but I tell you, put on the radar of a country that we think is on the cusp of civil war, which is Great Britain.
Yeah,
I'm with you. That's a failed state, an energy vassal, immigration issues. It's insolvent. It's no longer the reserve currency. It likes to act like it is. It's no longer the great imperial, empire power that it was, but it likes to act like it is. And the political leadership there is totally tone deaf, spending all their time on foreign policy and spending no time on domestic policy. Keir Starmer's nickname is Never Hear Keir.
Yes.
And so
we have comments on that regarding our prime minister. Never hear.
I noticed that Zelensky picked up another cool $2.5 billion in Halifax last week.
And loan guarantees last week. Yeah, they're doing 24.5, the highest per capita. By the way, the Western Europe. Yeah.
We like to say that when you're in the bomb making business, peace is a working capital problem, isn't it? And so war is a racket, and there's obviously Western companies getting this money. It's not. Aside from whatever's getting siphoned off in Kiev, most of it is going to military-industrial complex companies over here. But we digress. But income inequality is a huge issue. Less so in Canada. Significant issue in the U.S. And it's not good. I mean,
Let me keep going with the UK theme on a broader theme, because I know you've written a ton about it. And I'm trying to think of not oversimplifying to such a great degree, but I find myself wanting to ask, do you think there'll be a European Union in its current form, say in 5 years or 7 years?
No. The European Union, we've written about this before. We wrote a piece a couple of months ago called, the end of the U is near, and it's going to get ugly. I've never seen a collection of weak, incompetent, ignorant, tone-deaf leaders like we've seen in the EU. And there's just no chance that this thing is going to survive in its current form. Once the war in Ukraine is done, then you're going to see a wipeout of these leaders.
And I'm certainly on that page, but think about this. You wouldn't have had a reason to see this, but research.co just did a poll, and they come out and say 46% of Canadians would like to join the EU. And I think, yeah, exactly. I mean, like, how ill-informed can you be? And I mean, I'm not sure though. Well, Germany, look at their economy, look at France, look at, as you say, I'm with you completely on the UK. My bet is you don't have an EU. Very much that you guys have written about as early as like 3 years ago and 2 years ago and 1 year ago. That's why I'm asking if that had changed at all for you.
No, look, I mean, the latest numbers from the Cisco Review of World Energy paint the story. The 27 members of the European Union consume 38 exajoules of hydrocarbons, and they only produce 5.
Yeah.
You don't get to have nice things when that is your energy balance, especially if you're at war with your prior cheap energy provider.
Yeah.
And they can't have heavy industry. They can't have any of it. And look, Hungary's going to leave. I think Slovakia's going to leave. We're beginning to see noise in Italy about, who owns its gold, all that stuff. This Ursula von der Leyen, I mean, come on, this is not long for the earth.
Let me, again, I've kept you too long, but please allow me just to ask, and I know these are synopsis, but that's why people go and subscribe, so they can see the deeper pieces. You can go back in the archive. You touch on all of these subjects. So, but I just want you to give me a hit on China and relations there and how that's going to evolve.
I think there's a grand bargain to be had between Trump, Putin, and Xi. If Trump had his way and he had full political freedom, he'd do it. It might have already been cut. It just hasn't been announced, Taiwan goes to China, Ukraine goes to Russia, the Western Hemisphere goes to the US. They all collaborate in the Arctic. There's no reason for the US to be at odds with Russia or China. I think there's certain powers in Europe that would like to see that. But look, China is by far the world's largest economy. Don't believe the nonsense, GDP numbers that don't include purchasing power parity. They are technologically leapfrogging the US. By wide margins. They're going to catch up on ships. They are a very dynamic people. And it's their turn. I think the U.S. can either fall as far as Britain did when it lost its role as the predominant global power, or it could cut a deal and be prudent about it and stop the forever wars and focus on its own backyard, which I think Trump would do if he had full political freedom, but he doesn't. And the last thing I'll leave you with is, because I know we're pressed for time, we should just do like a 3-hour podcast sometime, Mike.
I'd love to.
We'll keep going until the first of us has to use the bathroom.
Wait, be careful what you wish for.
I'm down. So I love talking to you guys. So here's our last mental model, and it gives you some insight into Trump's degrees of freedom politically. And by the way, our mental models don't need to be right. They just need to work. And as long as they're working, we keep them. And once they stop working, we discard them. Our current mental model is, hypothetically, if there was a secret ballot in Congress, 80% of the existing members of Congress would vote to impeach or remove Trump. There is no such thing as the DC Republican Party.
Right.
There's Republican parties in the states and in the locals and stuff. But in Washington, there's the Uni-party only. There's a little bit of Trump, and there's a little bit far left, like the Bernie Sanders crowd. In the middle, that 80%, there is no difference between Mitch McConnell and Chuck Schumer and Nancy Pelosi and your average Republican House member. They're all in on it. Forever war. There's a huge amount of fraud going on. Everybody's pockets are being filled. It's gotten out of control. But they don't like Trump. The Republicans do not have all 3 branches of power. Trump has the presidency, and the Uni-party controls everything else.
Mm-hmm.
The reason why the Republicans won't break the filibuster is because they don't want Trump's agenda to be implemented. So it's just that simple, because they're not Republicans. So once you understand that just because the person on Fox News has an R in the brackets after their name does not mean that they're actually Republican. That's just the team they're pretending to play on. It's the same thing in Britain with the Labour and the Conservative Party. I have my doubts about Farage and whether he truly is a reformer or not. Canada, same deal. So, once you see the rules of the road, then you could sort of begin to predict, why is it that Trump is doing certain things and not other things? And why is he doing Venezuela? Our view is because he can't win the war in Ukraine, doesn't want to go to war with Russia, and then the neocons need someplace else to drop their bombs. And so he's given them Venezuela. Rubio's the son of Cuban immigrants, has no love lost for strongman dictators south of the U.S. And this is a little distraction for Rubio and his travel.
Well, this has been a brilliant way to start the new year, and with thanks. And I just again want to remind people that they can just go to Doomberg.com. Doomberg.com. You see a lot of stuff there, but you can subscribe to the newsletter. You can go to Substack, etc. As I say, I'm not doing justice to the wide variety of subjects that are so pertinent today, but always, as you've heard here today, unique way of approaching them, unique way of thinking, and brilliant insights. Doomberg, thank you so much.
Thank you, Mike. Great to be with you. Have a great 2026. Looking forward to coming back on. And I'm serious. You want to do 3 hours? I'm down for it.
That's fantastic, really fantastic. Doomberg.com.